Hi, welcome to the Market Week in Review for the week ending May 17th to 2025. My name's Alex Kersley. I'm a senior investment strategist for Asia Pacific. And really, this week was another week of constructive market developments on the back of trade. So last week, we had the US and UK agreeing to a trade deal. And over the weekend, coming into the week, we had the beginning of the US-China trade discussions. Heading into that, there had been suggestions that the US would be open to lowering tariffs from the 135%. And as it landed, Trump announced that they would be reducing tariffs to 30%, and China will be reducing them to 10%. So that's a very meaningful shift down from where they were previously sitting. And this is for a 90-day truce, effectively, as they continue to build out those negotiations. So that was quite an encouraging development in terms of the change on the effective tariff rate from the US. It has come down quite a bit from where we were at the peak, and that does reduce some of the recessionary pressures a little bit. So we're kind of still debating about 35 or 40%, and we think probably towards the lower end of that is probably appropriate for now. Looking ahead, there is still obviously a lot of work to be done on this US-China relationship. And then we also have India, Japan, and South Korea, where discussions have been ongoing. It seems that India is more likely to be closer to an announcement than the latter two, especially given South Korea has some domestic political considerations. The second thing that's really come through this week from my perspective, sitting here in Sydney, is what is going on in China. So we got the credit numbers for the month of April. And I think generally, it suggests a continuation of the trend we've seen where then there isn't a huge pickup. It's a gradual improvement in some of the credit numbers, but, we aren't seeing a really resurgence in credit demand. I kind of think that reflects the domestic softness in the economy, as well as some of that uncertainty around trade. And so as we look forward, we think we're going to see more monetary policy easing from the central bank in China, and potentially a little bit more fiscal stimulus. That potential for that, though, has probably come off a little bit if this trade deal is a sign of where things are going to land. The final thing, in terms of the US economy, is really around this soft versus hard data. So for a while now, we've been seeing that surveys and softer data has been showing deterioration in people's views on where the economy is going. And to date, we hadn't really seen much of a deterioration in the hard data. So we can track job listings on Indeed. We can track consumer spending through JP Morgan and Bank of America card data. And all of those things are pointing that things were holding up pretty well. We got the retail sales number this week in the United States. Again, that looked relatively okay. And then the jobless claims, again, was quite healthy. And so we aren't seeing any rising signs of stress in the labor market. So jobless claims have been fairly steady. And from what we can see, consumers are holding up quite well. And so that divergence for now is continuing. And perhaps with this trade negotiation developments, the soft data might be starting to bottom out and perhaps improve if these more positive headlines continue. So with that, thank you for your time. Thanks for listening. And we look forward to seeing you next week. Bye.
Hi, I'm Sophie Antal-Gibert, Head of Portfolio and Business Consulting at Russell Investments. If you liked what you just saw and heard, consider subscribing to our YouTube channel or check us out on LinkedIn. Thanks for tuning in.